So we got the Bitcoin bulls fighting for key support over there, trying to defend some key levels. We have the presence of a potential bear flag, which if it does break down, is going to bring much lower prices. In today's video, we'll have a look at where that breakdown is most likely to occur, what the probabilities are of that happening, and then I'll update you on the rest of the trades that we have, things like gold, MicroStrategy. We have an Ethereum long on the table as well. Monero long, all of them pretty much in profits. The only one that's slightly down is going to be the Apple trade. So we'll review all of these and a whole lot more. Smash the like button. Let's get straight into the show content. Just quickly looking at the bubbles chart over here. You know, most of the coins coming down over there on the daily, and we're in this very, very, very low volume environment. When there is low volume, rallies will typically fade. And that was pretty much the message and the warning for not only all of last week, but the week before that as well. And that's currently what we're still seeing. So before we get into crypto, let's just quickly review what's happening in some of the other markets like the commodities. We have gold extending its gains over here, really pressing into that previous top over there. And just a quick reminder, when we saw silver do that, silver went absolutely parabolic and broke through those key levels. We'll actually have a very quick look at that relationship once again, as we've been following that for the last couple of weeks. So there it was, silver applying that pressure. You can see over there into the double topped territory at 54, and then silver just smashed directly through that, and looks like this thing wants to continue higher. And I guess you can work out a measured move over here on silver as well, just by looking at that that pole, right? So if you're looking at this as a bullish continuation, that could take silver as high as about 72. And a lot of people faded it. A lot of people don't want to look towards the commodities. And now I think that you might see a similar pattern playing out on gold. What's interesting about this is you have almost the inverse relationship between gold and Bitcoin, right? So Bitcoin definitely not stepping up to be gold 2.0 because when you have a bull flag over here happening on gold, you have a bear flag happening on Bitcoin, unfortunately, right? I still love Bitcoin. Don't get me wrong, long term, I'm very grateful for the volatility and the big swings that you get within Bitcoin, because that allows us to accumulate more Bitcoin over time. And of course, over time, the chart goes up and towards the right, but you would be ignorant to believe that you don't move through bull markets and bear markets. And those bear markets provide you opportunities if you were selling in the bull market, which we were, right? So there we go. That's what we're looking at over here. Gold moving towards the upside. The S&P 500 still looks somewhat in a position of strength. It's not as powerful or strong as what we're seeing over there in the commodities, but holding above that level, that's what we wanted to see. 6,800 defended, and that should extend this a slow grind higher on the stock market. Dow Jones as well, slow grind higher. It is trading at all-time highs, right? There's absolutely nothing bearish about that. Our previous trade taking a long time to play out, but nevertheless, this is still in profit, 7% move towards the upside. And then we have NASDAQ, which is a little bit weaker, but still coming into that key support as of today, 613. We basically want to see this level hold. If it fails, right, that could be the presence of your first lower high. And if that puts in a lower low, then you can say that, well, maybe on QQQ, the trend is beginning to shift. And if we look at the small caps over here on Russell 1000, also still very strong, closed at new all-time highs on those previous closes. That was on Thursday. So we'll see what the stock market brings this week. And then I said we'll quickly review Apple because if Apple, and I needed to make that decision, right? I said if Apple starts to close this candle really, really strong over here, there is a chance that this will lead to continuation. And we're in a short trade on this. It will likely squeeze this higher. And then we need to look for a new opportunity on a short trade. And the reasoning for the short trade over here on Apple is because you're testing the top of a multi-year parallel channel. There it is, top of a multi-year parallel channel, testing into that region while simultaneously compressing into the top of a rising wedge, which is traditionally a bearish chart pattern. And that was the trade setup. And this is purely to counter some of the other trades that we had, right, which are other long positions. So because we're using grids, we're not really at any loss, 0.73% over here. So I need to make a decision on this one. And I might be cutting it a bit early because we don't have any confirmation yet, but I'm going to close this position over here. So that's it. We're going to take a 0.7% loss. Therefore, we're leaving the other trades on the table. Monero, we're in profit over there, 21%. Gold, we're up 9%, and we're looking to extend those gains massively. Ethereum, another one that's a topic of discussion, because if Bitcoin is in a bear flag, that could break down and drop Bitcoin into the 60K region. Well, what does that mean for Ethereum? When you still do have a relatively strong looking chart on the ETH BTC, which wants to extend those gains higher. So we'll review Ethereum as well in a moment. And then we have MicroStrategy up, 1,029%. Huge gains over there on the MicroStrategy short trade. So I'm going to continue to leave that trade. Let's quickly review that week. On my main account, I did cut 75% of that. But look at that. Bulls under massive, massive, massive pressure. I'd give it a bit more time. I still think there's a likeliness that you could see MicroStrategy bounce from here, and that bounce at some point in time is probably going to test between 235 and 260 into this area of interest. That's going to be your complacency bound to a lower high. And then I'm expecting further downside, at least into the 100 region, back below these lows, possibly even as low down as 50. And then I think that MicroStrategy will probably base out, for the rest of the time. So if you do something like that, you're probably going to base out at some point in 2026, reaccumulate, and then you can run the whole playbook all over again if you believe that MicroStrategy is going to be a high beta player and it's going to outperform Bitcoin. This is like trading Bitcoin on leverage without really the risk of liquidation, because you're buying pretty much spot MicroStrategy. So those are the positionings over there, just to update you. Reminder, you can copy these in the link in the description below. You'll see is the Pinex bots, and they are giving you a big sign-up bonus. You have all these incentives where you can win iPhones, watches, AirPods, and I think you're getting $1,000 for using that link. Here it is, if you're using that link in the description below. So there's a video, it will show you as well in that video how to claim your bonus. All right, moving on. So we've covered that. Let's move into crypto. A couple of very, very important things that are happening right now, and it's not really a good case for the bulls. I must be honest with you. The longer, I told you, the longer you consolidate at these highs into this yellow box, the higher the probability is that, unfortunately, this is going to lead to a bullish order block and therefore a breakout, a strong, aggressive breakout towards the upside. It's not over yet for the bulls. When I say over, I mean over in terms of getting a potential relief rally that could print a head and shoulders formation, therefore your right shoulder. However, that right shoulder theory is beginning to diminish. Let me just quickly see if I have on my other screen that chart, just to illustrate exactly what I am looking at over here, because you need to see this. Here we go. So we gave this as a potential scenario. The longer that you consolidate around this region over here, the less likely this right shoulder will even come into play. And the more likely it is that you're just going to play out a bear flag, which is going to drop prices even lower. Now, if the right shoulder plays out, you'll be lucky to get something like that if you do break down lower one more time. But this is a big bearish order block on the high time frames. So for example, on Bitcoin, you got a big bearish order block that's forming, also known as that on a daily, it will lead into a bear flag, and you're getting the inverse of that, which is a big bullish order block over here, multiple candles consolidating next to each other on a weekly scale. If it's a weekly, you know that it's significant. And not only that, but multiple touch points, right? 1, 2, 3, and 4. We know that the fourth time or more is a high likelihood that this will breach through in an explosive way. So we've now got 1, 2, 3, 4, and we're working on the fifth candle. Usually, you don't really go beyond that, which means that that breakout could happen as soon as this week. Remember, it's all a game of probabilities, right? No such thing as certainties. It's just each candle that prints over here, the probabilities become more and more exponential, right? So, like, for example, a pressure cooker, if you start to increase the pressure more and more and more, the closer that you get to that breaking point, the higher the probability is that it's going to break through. And that's what we're starting to see unfold over there. So, the hopes of this right shoulder and the slow grind up are starting to die out over here for the bulls, the crypto or the Bitcoin bulls. So what we're looking at to highlight and line this up, what's going on with this bullish order block on the weekly time frame for Bitcoin or for USDT dominance. We can also look on the daily time frame, and basically you can see this is what I mean, inverse, right? Inverse to what you're seeing on Bitcoin would be a bull flag that would be starting to form over here. You can see that a bull flag is starting to form. Yes, it can grind a little bit further over here, but as long as it's holding above those moving averages, this is more likely to begin to break towards the upside over there, and that equals this pushing up into 7.78. which will be painful. I know for most of you, and I'm really sorry to say that. The reason why I say that, I know for most of you, because I just looked at the poll results, and if you look over here, when will Bitcoin see an all-time high? 59% of you believe it's going to be in 2026. And therefore, I say most of you because I'm just, I guess, assuming, so forgive me for the assumptions, but I'm just assuming that the majority of you are in a hopium camp, hoping for all-time highs, and that this is just reaccumulation for high prices into 2026. Now, although that's possible, it's all about the probabilities, right? The probabilities, in my opinion, are much higher than not that you're playing out the traditional 4-year cycle, 3 years up and 1 year down, which means 2026 will be a bear market. And we are, in fact, in a bear market right now. And you'll be looking for low prices, possibly $30,000 to $40,000 for Bitcoin in 2026. Reaccumulation. This is under the assumption that it plays out like prior cycles, where you retest from the high down to the low. The Fibonacci retracement would be the 0.786 to the 0.886, right? Every single bear market found its low in that Fibonacci pocket. So you're looking for something similar to that. That takes Bitcoin down to $30,000 to $40,000. I know most people completely disagree with that. Why? Because ETFs, right? Institutional adoption, things like this. These are the types of comments that you will typically hear. But as long as USDT dominance is above the 50 and 200 EMA, this is still theoretically in a corrective phase of a broader uptrend, and you're looking for higher prices over there. So just do be aware of that. We're coming off incredibly low volatility. It's squeezing down, right? Squeezing, squeezing, squeezing. We had the big move. This is just a corrective bounce, and it's more of a flat correction within a downtrend. And that's still the case. So looking at the long to short ratio, market's still relatively balanced. We have seen a big uptick over here in total liquidations as of today. And that's just purely because the weekend was incredibly boring. We have the fear and greed at 16 over there. We have the long to short liquidations over here, majority being longs getting squashed. It's not that high. 292 is very, very, very low volume still. Very low volume. Volume is declining in danger territory, right? 37 billion. It's breaking below all those key supports over here. And we need to look at the all-time. Imagine drawing a trend line up over here, a little bit of a diagonal trend line over there. As soon as you start to break that, it means you could full retrace this entire move. The ETF flows are very lackluster. Let's look at ETH, also very lackluster on ETH. Look at those dailies. Not much going on, right? Not much accumulation happening from the institutions at the moment. And consequently, that's why everything is going red. Everything is going red. It's just a slow bleed out. So here is your bear flag. This is your bear flag. It's pretty much textbook perfect. You go from the top down to the bottom of the flag. That becomes your measured move. That's your pull. Now, it depends on when this breaks, but there's a lot of pressure. Look at those moving averages coming down, right? You couldn't even bounce up into the golden pocket over here, which was the one draw, the one area of interest that we're looking at. Now, could you continue to grind this parallel channel out and move up again and hit that level? Of course, it's possible. But again, go back to this. Probabilities are diminishing for the bulls the longer that price spends within that region, which means if you do break this down, let's even play the assumptive game that you rally up here one more time to about $97,000, and then you come back down into the zone over here, you know, that's going to drop you down to about $53,000. So there will be support. There will be bounces along the way. In fact, let's go back to this chart over here. I would even be willing to take a spot buy into this key zone over here at about $70,000. So if you do come down into that 70K region, I'll be willing to take a spot buy, giving maybe this head and shoulders another chance, right? Maybe you're just forming your neckline over here if you do come down, but there's going to be a lot of momentum with the bears. If this does start to break down over here, you know, one more bounce opportunity coming in at that 70K region to maybe still form that right shoulder, which would only happen later on March of next year. And then I would expect continuation further down. So that is currently the situation. I know that it's very simplistic, but sometimes that's as simplistic as you need to make it. The simple analysis and the simple thing of trend, lower lows and lower highs, and bear flags play out more often than not in crypto, as well as the bull flags, right? Bull flags, ascending triangles, bear flags, descending triangles. These are rock solid. They work time and time again when it comes to the crypto market. So the entire last 12 months of price action, if you look at this, this is looking like a big distributive range. There you go. The last 12 months of price action shows you a massive area of volume resistance, all coming in between $95,000 and $97,000, and you're still struggling over there. So is it possible that this is just, a wave 1 into a 2 bounce, into a 3, into a 4, and you're still going to put in the 5? Possible. At the end of the day, big resistance over here. Bulls have a lot of work to do. And I think it's better to buy on a confirmation of a break higher than to try and buy, the bottom of a flag, of a bear flag that's forming. But if you were trying to buy the bottom of the bear flag, this is where you would do it, because you have over here this rising trend line, touch point 1, 2. You came exactly into that third touch point. You tagged it over here, and basically you'd want to see that level hold. And now you'd want bulls to slowly grind this up. Personally, I'm not one that's going to be taking this over here, but you got a low, you got a high. What you can do for the low time frame traders, if you do want to get this in as a low, maybe it's just a hedge trade, right? Maybe you're not even trying to, make millions of dollars on this trade, but you're just looking for a hedge trade. You're going to have this over here. You're going to have a little bit of a bullish order block that formed. If you do get a bit of a sweep back into that zone, this becomes your buy, right? So move down into there. You can put your stop loss below that wick low, and then you're going to be looking to trade this back up to the yearly open. I think it's a lot of risk to take that trade. Why? Especially because we're going into the holiday period now, vacation season, and the volumes are going to be even lower. And any pumps that occur in a low volume environment have to be treated as a big trap, a bull trap, that is, meaning you would be expecting low prices. So I think extremely likely that this low is going to be taken out some point in the future within the next couple of weeks. So even if you do come down, it's just going to be a technical bounce, and it's probably going to fail, and then you're going to break that down. Most likely, unfortunately, right? It's the reality. Sometimes you have to give people the truth. Not sometimes, actually all times. I believe all times. So your relief rally or your little technical bounce off of this zone on the low time frames, we're looking at the hourly chart based off of this trend line. That little technical bounce would be based probably on a little bit of a short squeeze. We saw that positioning, right? In a low volume environment, they just had to wash both sides out. Both leverage traders, longs and shorts. So you wash the longs out. Maybe tomorrow or later this week, you're going to wash out the shorts. We got deltas, negative across the board. We got liquidity building on the top side. 13 million on a 24-hour look-back period. It's not bad, right? If this starts to push to about 20 million plus, expect that it's probably going to happen. You're probably going to get that little bit of a technical bounce. But I think that your most important thing to be focused on is the dailies. Do not lose sight of those dailies. They're very important. And we're looking for trades on both sides, right? That's why we have these positions. So I, of course, did just close that one trade now as well, the Apple trade. We're going to reevaluate, we'll move this up. We'll reevaluate what to do with the Ethereum trade. Now, let's do that now, right? Because ETH BTC, there it is theoretically holding up. We said that you don't want to drop below that red line. But what we did see over the course of the weekend was you gave up a lot of gains over here on ETH. I might leave my trade still open because I got in at these lows all the way down at the bottom over here on the grid. Hence, the position is still up 17%. So for me, it might be worth leaving this trade. But if you find yourself underwater on ETH over here, it's probably wise to de-risk some, because it's very likely that this is going to move back down into the zone. Okay, back down to about 2,800. Problem with that is 1, 2, 3. You're coming in for the third test. Very likely that could start to break down. So I'm going to leave my trade on because I managed to get it in at a great place. Whereas if bulls do start to fight back and get things back above here, ETH USD will start to look good again, while ETH BTC is already holding up over here. So that's my plan of action, right? That personally, with this little account that I have going on over here, this is to keep our mind sharp, our tools sharp over here, and we're just playing them for small gains over here. Call it, money for jam, right? Some vacation money, a couple of $1,000s up over here across these various different positions. We're not trying to buy houses off of this account. We're also not trying to buy supercars. We're just trying to trade over here. Alrighty. Monero, we have to review Monero. Monero is one that I said could play out a big cup and handle formation on the high time frame. So let's review that. And it's still looking good. The slow grind continues, right? So there's the Monero trade. The slow grind continues. We're going to leave this position. We're up like $1,000 on this as well. And I'm not going to be closing this off. You're going to be applying pressure into this. As soon as you can break about 450 to 460, this thing's ready to cook. Back up to 733. So we do have longs on the table, but we're trying to long only the things that look relatively strong. Zcash, back down, right? This could be a serious rejection over here that could send you back down to about 303. So, you know, in a more extreme scenario, I said a run up over here to 576, but maybe that's it. Maybe that's all that you're going to get. I don't know. That's why I take both trades, right? Hedge your position, stops to break even. Look for the long trade, move stops to break even. That way, whichever way the market wants to break, you're in the money. Okay. Next, we can go into a couple of requests over there as well. I think that these are some of the major things that I wanted to uncover today. Let's just quickly double check. So we gave Apple, we've covered that. XMR we covered, gold we covered, ETH long. I told you what I'm doing with that. I wouldn't enter into a new position now, but if you took the original trade that I took and you're up, just leave it. If we start to move back towards break even, we'll begin to cut some of that position. So no need to change anything over there. MicroStrategy, still holding the short trade over there. Oh, World Liberty Finance. Let's go over World Liberty Finance. That was the other one that we had. And where is that? Here we go. World Liberty Finance. Let's have a look. Okay, still in profit on the short trade. Still coming down, still distributing. Watch this trend line. So very similar to Ethereum. What I said, if Ethereum, the problem is if Ethereum comes down, it's coming in for the third test. Third test, when trends are down, the momentum will be strong. And therefore, there's a possibility that this just easily breaks straight through. Okay. All right. Cool. Let's see. What else, guys? Let me know in the comments. Particular requests. Yes, we'll look at the majors. Solana, we'll look at things like that. We'll look at XRP. Let's go straight on to XRP then. XRP is at very, very, very key support. It could elicit a technical bounce, but again, consider how many times this has been tested. It's a lot. I would not be surprised to see this begin to break and close below. As soon as this breaks and closes below 190, expect full distribution all the way back down to the lows at 55. Okay, Solana. Let's have a look at Solana. What's going on over here? The outcome of what we're looking at last week was on Solana was on the daily time frame. We said it's really in the middle of no man's land. It's more bearish and bullish because you're consolidating after a strong move towards the downside. And there's just no strength from the bulls whatsoever. You need to wait for strength to come back. Otherwise, expect this to drop down to about the $100 territory. SUI, also very weak. Strong move towards the downside. Bulls are cooked under massive pressure, struggling, couldn't get above the 50% level. Good chance that it begins to break down over there. Alrighty. Sonic, still very weak. Look at that. Full retrace, right? Full retrace of the 1010 liquidation event. Terrible. Next. What else? What else, guys? Can you still get into the World Liberty Finance trade? No, it's too late. Too late. Just wait. We'll find new opportunities. Just wait. There's nothing you can do over there. Next. Say looks terrible. Cardano looks terrible. AVAX looks terrible. I mean, guys, this is going to be the same story, right? Terrible. Anton, Casper, not good. Tron, little small bounce over here. If anything, you can start to look for short trades with stops floating at about 29. Okay, Tau, you say there's a halving coming up. We'll look at Tau. There's no liquidity in the altcoins, in most of crypto in general. There's no liquidity. The halving to me doesn't mean anything over here. I think very good chance that this is going to easily come back down to about 205. 19 December Japan rate thoughts. Yes, there is going to be an interest rate hike for the Bank of Japan. I think it's over the 18th and 19th. Of course, I'll be doing a show and I'll cover that. But just to quickly summarize the thoughts, we already mapped this out over a week ago, and we said that don't be surprised if there's a little bit of relief, a slow grind up into the US interest rate cut. And then the real thing to watch is going to be the Bank of Japan interest rate hike, which could drop the stock market, which is why we're marking those pivot levels so clearly. And that would probably lead to Bitcoin continuing down. And I probably also should mention over here, and we'll just quickly go over here, I think that you're probably going to be getting your next bear moon very soon as well. So there it is. That is going to be on the 19th when the Bank of Japan probably raise their interest rates. That could lead to the breakdown of this bear flag. Okay, that could be the breakdown of that bear flag. So you need to be careful. ENA, we can have a look at that. Again, most of these, if I'm long on something, it's because it's the only thing that looks good. So for example, like Monero, ETH, give ETH a chance, right? We're giving ETH a chance over there because of the ETH BTC chart. But most of the other things look shocking. Look at that, ENA. It's gonna sweep this low. It's gonna come down below 19. I'm highly confident of that you're gonna see another 23% downside move. And you're gonna sweep this yellow line. Okay. What else? Gold, we've covered gold. We're in a long trade on gold and we're expecting much higher on gold. We're looking at the inverse trade on gold versus Bitcoin. Bitcoin's in a bear flag, gold's in a bull flag or bullish pennant, whatever you want to call it, a continuation pattern to the upside. Bitcoin is in a continuation pattern to the downside. Cool, guys. Let me know while we wait for a few more requests to come through over there. Let me just quickly make mention of BitUnix, which has an amazing offer at the moment for those of you that want a no KYC, which means you don't have to submit personal information. If you're looking for a no KYC exchange, they're doing a big offer at the moment. $50,000 can be won and an iPhone 17 Pro. Plus, of course, you're still getting your usual sign-up bonuses, which are extremely lucrative over here. Based on your trading volume, you can unlock up to $50,000 as well. And you're getting your sign-up bonus, right? Hype. Yes, let's have a look at Hype. Hype has been one of the stronger ones. So we should look at Hype. How's Hype looking? Let's look at the, let's move Aster back into the mix over here. So looking at Hype over here, I said it looks incredibly weak. Look, it's been absolutely bulldozed down. So of course, a little bit of liquidity could easily create a spike like that. But at the end of the day, this is getting absolutely smashed towards the downside. And I think, let me just remove that. I think that as long as you can't get back above 31, you're ultimately going to revisit step by step down through these targets, these downside targets, 23, 19, and then 17, one step at a time. So the fact that you've lost this key level is not good. If you can break and hold above that on Hyperliquid, if you can get back above $31, great. Otherwise, expecting further distribution. For Aster, same thing. I'm expecting reaccumulation somewhere within this. I mean, it could easily come down to like 65 with a bit of a slow bleed. And then maybe you're going to print a bit of a rounded bottom, but that's only going to happen next year. Too late to get into the Monero trade. I'll look at it in a moment. Apex, okay, we said always full retrace back down to the bottom. And let's go to Monero. Let's see if you can still get an entry over there. How far up are we on Monero? Okay, we're already up over 20% though on the trade. We're on 3x leverage, so it has started to move. There will still be an opportunity to get into Monero. You know, you have two options, and I just want to clean up the mess over here a little bit. Let's just get rid of that and that and that. There we go. So there is still an opportunity on Monero. I would look at the daily chart, the most recent low to the high, and you can probably line that up on even a 4-hourly. So this leg, okay, this leg over here, low to high, pullbacks to about 390. So that would be the level that I'd watch. I'd watch for I'm going to give you two levels. I'm going to price label them. So for anyone that still wants to get into this, I would say between 383 and 392 is giving you about a $10 range. So that's what I'd want to see. If I saw something like that and I wasn't allocated, this would be an allocation opportunity. And then you got your major 50% level as well coming in over there just below that. So that would be the allocation opportunity. Maybe throw in a bit of a trend line here as well that's starting to develop. So you can see that trend line forming. There you go. Touch point 1, 2, 3 coming into this 379. That's going to be an opportunity over there. And I think you should get it because you had a nice move up. Watch for that bit of a pullback. You can always copy the bot that I have set, right? Which is over here. If you just go to Pinex, click copy the strategies, this will pop up, but only click it when it gets into that zone. Then you can click copy. So as it comes into the zone, just go to the YouTube video, click copy, and then it'll take the same settings, and you'll basically get almost a little bit higher than what I got in at, but very close to where I'm at. Okay, cool. 𝗔𝗹𝗹, yes, we have a look at 𝗔𝗹𝗹, but 𝗔𝗹𝗹 we got taken out of the short trade. It is probably still going to be lining up for another opportunity again, another short trade. Yep, I mean, to be honest, you could just re-enter into this trade over here. So you could float your stops over there. You can take the 𝗔𝗹𝗹 short trade again. Same thing. Okay, Chainlink. Let's have a look at Chainlink. The Link Marines. You got to love the Link Marines. Yeah, Chainlink. I'm just going to put one line in the sand. That's it. This is the only thing you need. Probably coming back down to about 960. This is distributive. So if you are going to have any kind of accumulation, it's probably going to do it like that. But there's just no need to play any of this stuff, guys. Like, I genuinely don't know why you would be involved with most of the things that you're requesting. This is very much a market where you just want to get in and get out. You want to take your trade. You want to calculate your risk. You want to know exactly where you're wrong, exactly where you're entering, and exactly where your plan is to exit. And you want to take that trade, eliminate the risk as soon as you possibly can, because it's so risky out there. And that's it. Like, buying anything that you think is going to be, you know, hard-hitting future potential coin is very, very dangerous. Like, I genuinely think that you might have better chances at the moment by just going red or black at a casino. Okay, cool. Meme coins, they're going to be rinsed. Meme coins are going to be rinsed. Let's check the best of the best, which is SPX 6900. And I just say the best of the best because in terms of the chart, we know that most of the supply is probably concentrated with 𝗏𝗏, one of the meme coin personalities out there. But even then, it still looks terrible. Like, this is just lower lows and lower highs. I mean, I would expect soon you're going to get new closes below 44 cents. WLFI, so far just distributing. I think the same thing as what I drew out over here. You're probably going to sweep all the way below there. 𝗕𝗃, definitely one of the best meme coins out there, and I think it's going to full retrace all the way back down to 134. Back down to the base. And that's going to, if that's what the best of the best ones look like, what do you think the rest look like? Is there a point in looking at them? So this is it. You get bull markets and you get bear markets. It is what it is. All right. Let's see, guys. Let's see. I'm checking your comments. Let's just see if there's anything else. I'm looking for opportunities as well. Let's quickly see what's going on with pump.fun. So full retrace back in. So very similar. Look, you got to consider, this is what I think might happen to Ethereum. So that's why I need to monitor this trade very carefully and decide, you know, do we even just cut it over here and just take the profit? Do you just flush this trade right now, lock in the profits? Because I just said, you know, I gotta take what I preach, right? Which is what I just said. Work out the setup, take the trade, take the money, move on, the end, look for the next best trade. So look at pump, and then let's go through to ETH. So ETH traded all the way up here. If it's going to do what pump's done, pump.fun, you know, it's just going to basically bleed all the way back down to the bottom. So let's go back to pump. There it is. Back down into key support. This is key support at the end of the day. But, yep, double bottoms. They don't often hold, right? So this could easily bleed straight through that level. There's just no momentum. There's no bid, no momentum, no liquidity at the moment, especially going into the holiday season. But also what I would say is don't lose focus. Very important. Don't lose focus, because oftentimes when the volume is the lowest and the liquidity is the thinnest, you can get the best trade opportunities, but this is purely going to be a relief bounce. Even if you do get that solid entry on a spot trade, you're playing the relief rally, which is what I would be doing on this chart over here, into that 69, 70K region. That would be a flat neckline for perfect head and shoulders, assuming that you bounce off of that neckline to form a right shoulder? Because that's what we don't know, right? Is this going to be a right shoulder, or is this just simply going to be grinding like this and then a bear flag that's just going to break down? I don't know. We don't have the answer yet. I would say the bear flag's more probable, but just because we've seen those play out more times than not, and the head and shoulders and inverse head and shoulders are less prevalent in the market, right? Less likely to play out. So, okay, a lot of people, I think, are obviously attaching to extended cycle theory, bull 2026, buying altcoins at 70 to 90% discount. That's all good and well, but all you have to do, even if that's going to be the case, I'm going to jump on board as well, right? I will miss out a small bit of the move based on waiting for a confirmation that you've reclaimed key levels. That's all you have to wait for. So all you have to wait for is prices just have to reclaim key levels. You just need to see some strength develop. Now, it's incredibly rare. What typically happens in markets, and you're really not going to like this, but I'm going to just tell you, what typically happens in the markets is you have a strong down leg, distributive phase, and then you have to go through a very long reaccumulation. Very long you almost never go down like this and then up like that. No chance. So the most likely outcome is you distribute aggressively and then you reaccumulate for a very long time. Very, very long time. Like, look at that. That already takes you into the second half of March. The second half of 2026, like April, May, June, somewhere around there. Then you form a strong enough base to maybe put in some more sizable relief. That is just the way the markets work. Following strong distribution, the psychology needs to reset. It's all psychology in the markets. What happens to this individual's mindset from going, like, let's say people bought on average over here, like someone bought over there, they're down 60%. There's going to be time periods where you probably distribute, they go down 77, 80%, and they're not going to jump back in. No one is. It's going to take time, right? So if you were going to have a bull run in 2026, it's going to be the end of 2026 probably. And that's just what most of these charts look like. So, Ether's got, Solana's got a much bigger trading range. We've already seen a decent size move up over here in XRP. So this one has yet to even distribute all the way back down to those lows. Like, cool, maybe it holds 160, but then you need to be buying down here and have a super tight stop loss. So like if I were buying XRP, I'd have like a tight stop loss underneath those consolidative lows that drove that price move up. And I'd be looking to buy as close to there as possible. And you would expect that move down should be brought up almost immediately. I think this is going to distribute. Okay, well, look at Pippin. You guys are asking Pippin short because I know that Pippin was absolutely pumping at one point, but it's clearly price controlled by market makers or a team or something like that. So we'll go to Pippin. There's Pippin. Before we go into Pippin, guys, I also want to mention if you are sick of your data being breached, you're getting all those random emails, phone calls, things like that. There is currently a sign-up bonus of 73% discount for 𝗏𝗏𝗡𝗏. 𝗏𝗏𝗡𝗏 is different to the VPN, by the way. So they basically remove all of your data from these platforms, plus they're giving you identity theft insurance. So for example, let's say, have you ever received one of those emails where they say that we know what you were searching and we're going to send it to your mom? I'm sure you guys have seen those things. I'm demanding $1,000 in Bitcoin, or I'm going to send those pictures of you to your mom. Well, they also cover that. If you go through to the bottom over here, they will give you insurance. Where was it again? 10,000. There it is. They give you for blackmail. Where is it over here? There's a blackmail protection over here as well. If your data gets taken and, maybe you're caught saying something you shouldn't say, doing something you shouldn't do, or you send strange pictures to someone, they're going to help you. They'll fight your case for you, right? That's not the only thing. It's, of course, it's beyond that. It's more about real data breaches, right? Sensitive information, passwords, things like that. So if you want that threat protection, 73% off for the holiday period. All right, let's go into Pippin. Okay, Pippin over here. It's getting very close. It's getting very, very, very close to the time to short this. It might have one more leg up. So yeah, don't jump into it too soon, but you can see this volume, right? Look at that volume. Straight down, big divergence. Price, straight up, volume, straight down. This thing's going to absolutely nuke. I think that the way that I would take this trade, and we can see, maybe they even have it over here. We can even take the trade. Let's actually see if they have it over here, because the best way to take a trade like this is going to be at the bots. Pippin, they have it. Oh my goodness, they have Pippin over here. So you need to allocate capital that you're willing to lose. I'm willing to just enter right over here on Pippin short and just put 500 in and scale up if there is another leg towards the upside. 1, 2, 3. You know, you may come down a little bit and then put in a fifth and final wave. So if you're looking from an Elliott wave count, you know, you might do wave 1, wave 2. This could be in wave 3, wave 4, and then there could be one more. But yeah, because this thing's dodgy, I'm gonna enter into a small short over here. So I'm allocating only 500 equity into this, and then you know, we can always add to that later. So we will go with the highest price. I'm going to scale into about 50 cents. Okay, 50 cents. And we're going to short this back to 0, basically. 0.02. 0.02. We'll put like 150 grids. And I am just going to put... wait, let's adjust those grids quick. Let's go with 50 grids. Okay, that's fine. 500. I have to go a little bit more based on the number of grids. So I'm going to go with like, that's fine, $760. $500 small. Yes, yes. I mean, for this account is very small. This is like $100,000 account. So it's a tiny trade. But we'll scale in. We'll scale into that Pippin position. Because I think in terms of an Elliott wave count, you know, there might be another move up. 1, 2, 3. We might put in a small pullback here and then slingshot one more time for the fifth. And then I'll scale it up big. Like I'll put in 10 times as much. Okay, Tesla. Let's have a quick look at Tesla over here. What is going on Tesla? Long trade still active. Everything looks good. Pretty much probably going to break into new highs very soon. Ready for it. Not new all-time highs yet. That's coming in at 488. But this next move up could take it there. So, you know, if you're looking for a long trade over here and you're not long on this already, I'm literally just going to price label it because it's the easiest thing. The low time frame trade entry that I'd go for, I'd probably have to invalidate under that. 403. Like I'm almost willing to put it under this candle over here with a tight stop because I think that this thing's just going to go probably today. But give it a little bit more room underneath that candle over there. This little wick on the daily time frame. Okay, cool. So you guys know what to do. We've covered most of the stuff. We've gone through a lot of altcoins. We took a new trade today, which is a Pippin short. We closed the Apple trade. XMR, I showed you how you could gain a new entry on that as well today. Gold, we're expecting massive continuation, so no changes there. ETH is a little bit sketchy. If Bitcoin begins to break down, we're going to close that position. MicroStrategy, no changes over there. We're cooking. Everything is good. The rest of you, I'll see you in Whale Room, of course. If you're not already in Whale Room, you know what to do. You can join the waiting list. That's the only way you can get in. The indicator has been distributed. If you haven't claimed the indicator, go to the section under announcements from Terry and just read what to do over there. I'll see the rest of you on the next one. I hope you have a good day, guys, and cheers for now.